Okay, we are back again, and I want to welcome you all back to this channel. In today's video, we're going to be talking about order flow, Confluence, and liquidity. So we're going to be literally talking about Confluence with the use of order flow, liquidity, and then inducement. So for those that know, without more introduction, this is the voice of TWB, and if you are new to this channel, make sure you smash that subscribe button and make sure you turn on your notification so you can get notified at first whenever I drop amazing videos like this. So without further ado, let's get started. Yesterday we dealt a lot or a little on inducements and order flow, but I want to go more into it today, starting with inducements. Okay, starting with inducements, we'll be talking about liquidity in few minutes. So what is inducement? And like I explained yesterday, inducement is when price is trying to touch a demand or supply zone that has been created, trying to fake the buyers that are impatient, and then eventually come back to touch the real demand zone and then move in the direction it's wanted or it's intended to go. So this is something like what we can call inducements when there's a fake movement. So this here is the fake movement. So as you can see, there's a fake movement so there because it's almost touched the demand zone. So those that are impatient, it will take them out, or it will deceive them, and then it will allow them to enter. Sometimes it's always even smaller. So you enter, then you hit your stop loss, then it will just come for the real entry somewhere around here. So most of the time it's always smaller. It doesn't even give room to to take profit. So it's just give you that fake movement, and then boom, it will just leave you like that, so allowing you to miss the whole move and hit on your stop loss. So that is exactly what price is trying to do in cases of inducement. So in these cases here, we can call this inducement too because it's a fake touch, even though price went up well from the demand zone. So this is a very good inducement, even without any confirmation trade, without taking any trade at all, any trade confirmation, just like I did here yesterday. You can just take the buy immediately. It is enough Confluence. Okay, so this is another inducement here also. So these are things I always like to point out before when I'm analyzing. I like to note them while I'm analyzing, but I don't really draw them on the chart, as you can see. So that is why we add that touch there. So sometimes also you would see that, okay, why did I take the trade, and why did I not use inducements or liquidity, especially if there is no liquidity and if there is no inducement? Most of the time my confirmation always sells out. So let's go back to confirmation and talk about liquidity a little bit. So in this scenario here, because I'll be explaining the three at the same time as I'm seeing them, in this scenario here, there was order flow here, like I told you yesterday. If you've not watched the video, make sure to watch it. It might come out in a minute, so just make sure you just watch it and understand what I was explaining yesterday. So this is order flow, as you can see here. Order flow, when there's series of demand zones. You can see there's a demand zone here, there's a demand zone here, just like I explained yesterday in yesterday's video. There was a lot of demand zone here while I was in the class, and I'm like, okay, this is a good time so that we don't miss the buy. You understand? So all this while I wasn't really online, all this demand zone that was forming, I wasn't really online. So I came online around here. So that's when I saw this massive move. I'm like, oh no, we must not miss this trade setup, because this Confluence alone is what we refer to as what order flow. When there is a demand here, a demand here, a demand here, and a demand here, so then that's enough sign. It's a good sign. It's a sign. It's a sign that price is ready to push. And look at what happened. Price really did push. But like I said yesterday, once you see inducements on the bigger time frame, once you see order flow on the bigger time frame, run, don't take it. So now let's look at some other scenarios here. That's why I was looking at this trade and I took the entry, sell entry confirmation there. So let's check if there was anything special based on inducements, based on liquidity, based on whatever. I think I was looking at the sell and not the buy. Okay, I think it was the buy I was looking at. So for this buy, I didn't really see anything. There's nothing here, and the sell too, So based on this, I can see I'm coming. Okay, this was the old supply zone here. This was that red candle was what I used. So I was looking at this liquidity here, because sometimes I always use liquidity too. Once I see that okay, there's liquidity inside the trade just before the demand or supply zone. So this is liquidity before the supply zone. This is liquidity before the supply zone, and look at what happened. Boom, the supply zone cleared the liquidity, just like WYCKOFF, the WYCKOFF concept I've always been explaining. And look at this. This was liquidity here. There's ton of liquidity here. This supply zone grabbed the liquidity with the with the sell movements, and then boom, we're good to go. So that is what we call the Quasimodo entry level. For those that don't know, it's just price taking out the highs or lows. That is the liquidity. I'll refer to that as liquidity, and then wait for the supply zone to form, and then you are good to go. So sometimes people call this Quasimodo, some people call this WYCKOFF. So it's literally kind of the same thing, just a little bit different. I'll call this modified WYCKOFF because there's no WYCKOFF schematics here, but it's a really modified WYCKOFF because WYCKOFF can be difficult sometimes, and if you're a WYCKOFF trader, you might not really see WYCKOFF all the time. Okay, so let's go back to our 4 hours entry analysis. 4 hours analysis, because most of the time you would mostly see this Confluence during your analysis and not your entry. You don't really need Confluence during the entry. So I saw something interesting now also. So yeah, so this is a little series of Confluence here. You can see this is liquidity, and at the same time it looks like inducement. So there's a lot ongoing here. There's a lot ongoing here. Even here, so there's, I'll just say liquidity. Let me put liquidity because there's a lot. Liquidity. Yes, there's a lot going on here. And immediately price touched it. It sold. At least it did how many pips? 150 pips. And then why did this zone fail? Yes. Why did this supply zone not continue selling up to this point? That supply zone got exhausted, or that sell move got exhausted, because there is another demand zone here that price needs to be respected. So that is why this zone failed. Okay, so at least it didn't fail, but at least you're expecting it to keep going. So based on my strategy, we trade from demand to supply and supply to demand, and that is why most of the time some supply zones don't work out and some supply zones will work out. That is because you are already trading next to the other or the latest zone, so definitely it wouldn't play out anymore. So this is inducement, as you can see. You can see as I'm spotting, sorry, as I should remove equal highs. As you can see, as I'm spotting, I'm not deleted equal highs. Let me delete equal highs. Delete, yeah. So you can see as I've spotted that inducement without stress. Without stress at all. I'm not even stressing myself. So that's about that. Let's go to GBP USD to spot some more reasonable movements like that. So these are ways without stress. You are just spotting it and you're good to go. And it's always good for entry. I prefer using liquidity for the entry. When you want to enter, use liquidity. It's always very good. You use liquidity as the confirmation. Look at what happened here. You can see same thing happened here. Price cleared out the liquidity. I drew my supply zone. Here, and you can see what happened. As small as it looks, very small and insignificant, price really sold at. It didn't even react to this demand zone that has been coming all the way from here. Price didn't even react to that at all. So look at what happened. As small as this supply zone looks, like it looks very small, that okay, do you think this is going to play out? And look at what happened. Look at that massive drop. Look how big the drop is compared to all these visible demand zones that you can see. So that is why it's very good to use liquidity as your Confluence. So without stress, that's your Confluence. So other flow here is the next Confluence here. So this is what I was trying to explain. So as you can see here, let me spot it well. Look at this other flow here. There was a first supply zone here that played out, right? then another supply zone again, then you miss the first supply, then that means you can still take the second supply. Why? Because there is order flow here already. So you can see how you can use order flow too, but most of the time I always use it for the entry, because once it's on, I always use it on the smaller time frame, because once it's on this 4-hour zone like this, it mostly always doesn't work, especially when it's coming at the third time. So if you are trying to trade the order flow here the third time, it won't play out, it will fail. So most of the time I always prefer first, second, but once it's already the third, it will fail. So that is how you can use order flow. But if you are still new to this, don't use order flow on the bigger time frame so that you don't get confused. You understand? So just stick to it on the smaller time frame, because look at what's happened here. There's order flow here too on the big time frame. It only happens 2 times. You can say I'm used to this thing, so that's why I know that it's 2 times or 3 times. So look at it here. Look at this first demand zone here. If you miss this first demand zone, fine. Then the order flow, the second demand zone, and then look at what happened. It's played out. So why did it fail? Why did this zone fail? Because there's already a supply zone here. So you are trading with a short, with a short range, and this is even 70 pips, which is still very good, because you can take 50 pips out of 70. You still be left with 20. So you can see that this supply zone is the reason this demand didn't even go well. And look at what happened. It still even played out well. It still really went up. So this is a very good order flow trade. You can use order flow for big time frame, but if it's just second touch, first touch, second touch, and then you trade the second touch, first touch, second touch, and then you trade the second touch. Okay, so that is very, very important. Let's keep checking again. Look at what I did here. Look at this one here. This was liquidity. This is liquidity, and look at what happened. Cleared liquidity, gave us a break of structure, and it's trying to give us a 4-hour supply here, but the supply didn't take long. No reason to that. Even 67 pips, so it's still good. Still a good trade, because if I entered this, obviously I didn't enter, but if I had entered this, I would have cut the sell. I would have cut the sell. So let's keep checking again. Let's keep checking. So you can see there's order flow here too. First touch, second touch, and then you trade the sell, and look at what happened. Massive sell. But once it's already on the third touch, you are trying to trade the third touch, it might really not play out. But if it's on the smaller time frame, trade it as many times as possible. So this is order flow again. First touch, second touch, then the movements. But this one, there's no break of structure here, so this is not an order flow. So, but this is a very good trade setup also, because there's a good entry confirmation here. Look at this W pattern. So there's a good entry confirmation there already, and that is a good, it's still a good setup, because there's a good entry confirmation there. So I want to stop there, because I love to trade and explain. I love to explain on trades that I've entered. I don't really like just going to a random chart and just start drawing tools. So these are things that I've used, that have worked for me so well. So by Monday, is there inducement here? There's no inducement, but there's enough liquidity here already. Okay, so that will be my basis for taking this supply zone. So after that, what will I now do next? I'll wait for an entry confirmation, because that is the superior. That is the superior. So by Monday, I'll take a sell here if I get a confirmation here, or else we'll get a breakout. But most of the time, price will just retrace. Most of the time, price will retrace. Yes. Most of the time, price will retrace news. Most of the time. But if price doesn't retrace, I'm not the market maker. I would follow the buy movements. Okay. So let's see which setup do I have on Euro USD. Okay, I'll trade my second strategy here, since there's nothing here. So I'll take a counter trend sell if I can get one here on Monday. I've taught my students all these ones, and if you want to become one of my students, just message me on Telegram or WhatsApp. It's just 50 USD, a lifetime access, and you get access to all the strategies, signals, and setups that I send. Okay, you understand everything I'm talking about, including crypto and volatility indices. So I'm going to be stopping the video right now. If you enjoyed this video, drop a thumbs up, smash that subscribe button if you haven't, because I know most of you have not, and also do well to share this video, and I'll catch you guys in the next one. Peace.